What actually happened in the Orange County housing market here in 2024? Well, I'm going to give you from our perspective after doing hundreds of transactions in 2024 and over 620 transactions since 2020. I'm going to give you my real advice as far as what I saw happen and kind of a breakdown so you can plan for your future maybe a little bit better. Let me share some fast values so we can get started. Number one, prices appreciated above average of 6%. So we had 6% price appreciation in 2024. Number two, we had the fewest sales in Orange County since the 90s. Like literally less people bought or sold, like less transactions happened in 2024 than during the financial crash of 2008. And interest rates did not come down nearly as much as people expected. That's the short, fast version. Let's get into way more detail. I have four major things that I'm going to break down as far as what really happened in the housing market for 2024 so you can better understand and better plan for the future. Okay, so the four things that we're going to break down and talk about is the total number of sales. The second is interest rates. The third is available inventory. And last but not least is probably the most important is price. So we're going to break down each of those in more detail, starting with the total number of sales. There are no two ways to put it. 2024 was a very slow year in regard to the total number of homes that sold. How does this affect you? It simply means that supply is really, really low. But we know that demand kept up with it, right? So supply and demand were rather low in 2024, which is why we saw this modest price appreciation. Tons and tons of people have been talking about this low inventory market that we've been in. And I want to give a little bit better picture because in 2020 and 2021, we had crazy low inventory, but we had really, really low active inventory. There were tons of homes that sold. There were more homes that sold than ever. It was so many homes sold in 2020, 2021. It was 20% more than a normal year. And let me show a chart. I'm going to put this up on the screen. There's this huge jump in 2020 and 21 that just fell off of a cliff. I mean, if I can point to the right part of the screen, like over here in 2023 and 4, you could see that the total number of sales completely fell off a cliff. There was a 46% decline from the top to the bottom where we're at right now. But even then, on a normal year, if you go to like 2017, 18, 19, we're 35% below a normal market, meaning 1/3 of everybody that should have moved just chose not to. So what ended up happening was 2020, 21, there were tons of homes that sold, but there was so much demand that supply couldn't even remotely keep up. There was 15 offers on every house. Everything was going over asking price. It was literal mayhem. Like as a professional in the marketplace, it was mayhem. Now, 2023 and 4 was there literally were just not very many homes that sold. That is the big thing. So this is why the total number of sales being so low is why 2023 and especially 24 felt so slow. It's just because fewer homes sold. Now let's move on to interest rates because this is probably the noisiest topic. This will be a rather quick conversation because honestly not a whole lot changed. Everybody was expecting interest rates to drop more than they actually did. But I think everybody's in the same boat here is that interest rates are going to continue to decline. It's just not going to be nearly as fast as everybody or a lot of people, most people had expected. There was tons of noise around interest rates. We had an election if you were living under a rock. That was involved. The federal funds rate, they lowered the federal funds rate, which is different than mortgages, right? So just because they lower the federal funds rate doesn't necessarily affect mortgages. I've got a chart for you that shows what happened with mortgage rates in 2024. And we saw this big dip when we started to see the federal funds dropping, when the Fed started dropping interest rates. We saw all of this anticipation that it was going to keep happening. And then the inflationary numbers showed that, wait a second, they might have started dropping too soon, too much, too fast. They pumped the brakes, interest rates went right back up to where they were. So other than a few months of lower interest rates, the overall year we were right in that 6.5 to 7, low 7 range. Now, available inventory. This is the big takeaway I want you to have for 2025. So there's a couple things that I'm going to share for us here. If you zoom out and look at the entire year, we had 10% more active inventory on the market at the end of the year, which is, for the record, that's really a good thing. We've been in this crazy low inventory market, especially 23 was the beginning of it. So having 10% more homes on the market is a really good thing. But again, it doesn't paint the whole picture. Look at this chart. So this shows 2 years. This shows all of 24 and all of 2023. And you can see 2023 was a pretty flat year. There wasn't a whole lot of change. But in 2024, you saw that there's a big kind of run up the first half of the year. The peak was August. So in August, we had 4,700 homes on the market here in Orange County. And then we fell off a cliff in the winter. And yes, there's always less homes on the market in the winter in every year. But look how big the drop was in 24 in comparison to 2023. I mean, this chart just shows you there was this massive drop off. This is the write down thing if you're taking notes. This is like the pro tip, is while we only had 10% more inventory on the market, we really had way more. I mean, we were at 50% more inventory all the way through August, and then it fell off of a cliff. Now, this is a sign of a healthier market. More inventory on the market is a healthy market. And I'm saying we hit a peak of 4,700 homes in the market. A normal Orange County housing market, let's look at this other chart, has between 6,000 and 7,000 homes on the market, meaning even at 4,700, we're still way below where we really need to be as far as total number of homes for sale. That's why we keep saying we're in a low inventory market. But let me show you this chart that is since 2008. So we talked about the 2008 housing market crash. You can see the inventory was 20,000, nearly 20,000 homes on the market at the peak of prices crashing. And then you could see it slowly finally came down around 2014. We finally got back to Orange County as normal inventory markets. But you can see just how low we are in the last couple of years by looking at this chart. Now again, more inventory coming to the market is definitely better. And you can see at the very end of this chart is just kind of starting to go in the right direction. Then it fell off in the winter here. But here's a major reason why I think so many fell off. There are 3 things that have to happen in order for a home to sell. It needs to look good, it needs to be priced right, it needs to be marketed well. Those are the 3 things that have to happen in order for a home to sell in this market. And a lot of homes they were missing one of those 3 things. And that led to homes sitting on the market longer when sellers thought they were going to sell fast. So a huge amount of sellers took their home off the market, and a huge amount of sellers kept their home off the market because they saw the market was slow. And as we are here at the beginning of the year, already seeing an explosion of activity, no real shocker here, but I think a lot of those homes are going to come back to the market. So my whole point of this, while we saw homes active inventory increase by 10%, I think we're going to see a big jump this year closer to a more normal market. That's my active inventory point here, and that leads us into price. Now, this is what everybody's wanting to hear. This is the exciting part. We had slightly above average price appreciation in 24. Nothing sexy, nothing crazy. Prices went up 6%. There wasn't even like it went way up and then way down. It was like prices went way up, came down a little bit at the end of the year, and we're here in January, and I can tell you from what we're seeing, boots on the ground, they're going back up. There's more activity, there's people writing offers, there's stuff happening. We're gonna see a spike back in January, which we see almost every year anyway. So while prices aren't super exciting, if you zoom out, 6% price appreciation, you can see that if you zoom far enough out, prices go up. So my advice to anybody who needs to move is to don't try to time the market, especially for interest rates, but definitely not for prices, because if you zoom out far enough, prices are going to go up over time. You might catch a window of opportunity, which we talk about all the time. I was talking about for the last 6 months. This last winter of 2024 was going to be a window of opportunity, and it was just not as big as I thought. The window was cracked open when I thought it was going to be wide open, and I'm totally fine to be wrong because that kept prices a little bit higher. So let's move into my predictions for 2025. We are going to move closer to a normalized market. We're going to keep seeing more homes come to the market. We're going to see more homes sell. And we're going to slightly, this is the second point, we're going to slightly see interest rates decline, but I don't think we're going to get below 6.5. I think by the end of the year, we're going to see rates go from 7 to 6.5. Certainly nothing to wait for. Last thing is we are going to be a boring year in price appreciation again. I think we're going to see somewhere in the ballpark of 5-ish% price appreciation again. All the major economists came out with their predictions, and it was 3 to 6%. Go figure. Everybody's pretty much projecting, not everybody, all the major ones that I've seen are projecting somewhere in the same ballpark as well too. Mind you, those are nationwide numbers. I'm talking only about Orange County. I think we will see homes hit the market and stay longer. So I think days on market, we're going to see go from where we've been like 14 days pretty much all year. I think we're going to see that get closer to the 30-day mark. So we'll double the time on market from 2 weeks to 4 weeks to a month. That's not a long time on the market either. A buyer's market, or rather a seller's market, is still anything below 60 days. So, and depending on who you ask, maybe 90 days. So we're so far away from that. It's still gonna operate like a fast moving seller's market because inventory is so low, but nobody has a crystal ball. That's kind of my projections as far as what I see. So let me recap that. We're gonna move closer to a normal market, meaning we're gonna see more homes sell, and that's a good thing. Number two is we're gonna see interest rates slowly decline, nothing to wait for. We're gonna see modest price appreciation of somewhere in the ballpark of 5%. And we are going to see homes sit on the market for a little bit longer, meaning sellers will have more competition, buyers will have more choices, but homes that look good, priced right, and are marketed well will sell even faster, right? So I think the average median days on market will be higher because homes that were sitting on the market will sell, and that will skew the numbers a little bit. But I think homes that look good and priced right or marketed well are going to sell even faster than they were before. So my advice to sellers is get involved right away. Listen to this looks good, priced right, marketed well, because if you miss on any of those three, it's gonna be a hard year to be on the market. Advice for buyers, get involved. Negotiating in a neutral market is actually harder than a buyer or seller market, and we're moving towards a neutral market. There is more room to pay too much. There's even more room to get a better deal. So I would highly, highly, highly recommend booking a buyer strategy session with one of our local experts. Now, my advice, if you're buying and selling at the same time, call your agent today, literally today. There are so many different options that are available to you now that have just simply not been available for the last several years. So if you're selling, looks good, priced right, marketed well. If you're buying, go look at the ugly houses, but set up your buyer strategy session so you can take advantage of our 7 saving strategies. And if you're buying and selling, it's just, there's a lot of moving pieces and you have so many more options now than you might even know about. So get an agent involved. As always, I hope you found this valuable. If you want to work with us or get some more information, go to onyxhomes.com. Click the buy, sell, search, or finance button. We can help you out with any of those things. My name is Christian. I will see you in the next video.